Look forward to the 28th, Thursday 28th of February. Trading's just finished for the 27th of February, so we'll have a look at what's been going on. Dollar made a bit of a recovery, so we've got something of a bullish candle here, but I wouldn't get too excited about that. Okay, we were a little bit oversold, so we might rally up to the 96.40, 96.50 area, which, as we know, will be resistance because these moving averages were support on the way down. I'd say anywhere from sort of 96.40 to 96.50 will be resistance. I'm not suggesting a short there because we have to wait and see if this head and shoulders pattern plays out, and if the neckline is broken. It's only when the neckline is broken that we actually have the sell signal. If you're feeling brave and you think the dollar will continue lower, then you could try a short there. I won't be doing that. I think that's too risky, but you see my reasoning behind that. If we close the week, in other words Friday, above 96.50, that would confuse things and it would make me question whether we'll rally up a little bit at the beginning of next week. I'm actually doing very little in the forex markets because they're just dreadful, really difficult markets to trade at the moment. Here is the Aussie versus the US, and a classic case of why it's so difficult. Big red engulfing candle. You would think that that would signal that the market's going to go lower, but it doesn't. It reverses for the next 3 days, makes up most of those losses, and then we get this big engulfing candle again yesterday. So there's no clear pattern, there's no clear trend, there's nothing we can do. The moving averages are just absolutely sideways, or clustering together, but they're not actually working as resistance or support levels either. So yeah, forex market's really very difficult to trade at the moment. New Zealand dollar not much better, as you can see. We're just in a big sideways move. We haven't got a chance to sell. We haven't had the chance to sell up around this trend line. I have got that on the spreadsheet as a short area, 69.30, 69.40. I think I've got on there. We didn't even manage to make that. Now we're just giving up gains from the last couple of sessions. I've no idea what happens in these really. If we got down here, it'd be worth a buy, worth trying a buy around these 100 and 200 day moving averages, but we're a long way off that. Pound versus the Swiss has been a cracking trade. Hoping you've all got on this one. It's worked really well. It's been easy to run as well. Having said that, I got out a little bit too early, but hopefully you guys are still running it. And we had another update yesterday. Now it's about time we took some profit because we are getting a little bit overbought. You can see that on the slow stochastic at the bottom of the daily chart. And we run into the 200-week moving average. I think that's a good enough reason to take some profit. We've had a great run out of this trade. As you can see, the 200-week moving average has certainly had an impact. The last 3 times it has been tested. It's not worth running the longs any further. There's too much of a risk of this red line holding it. Look how it worked well as support here too. So yeah, let's wait. Let's see if we back away from the 200-week average and maybe come down and give us another buying opportunity. But I think you've probably been able to bank a couple of hundred pips or more on this trade. So it's definitely worth taking the profit. Actually, this was our break point, wasn't it? When we broke above this trend line at 129. I think I had a buy above 130.00. So if you did get on this trade, you may have even taken as much as 300 pips on it. Definitely a big winner. The pound has been the big winner of the week. It seems to really have some strong momentum now. Here against the euro, we're seeing euro losing against the pound. We've broken some important levels recently, so it does look like further pressure to the downside is likely. We've broken the 2018 low significantly. We broke this late spike low in 2018 as well, and we broke the January low at 86.15. So the moves to the downside, and I think this is likely to continue. Who knows, we could even get down as far as 84.20, which would be the 38.2% fib support. And then we've got very important moving averages down here at 83.70, 83.60. Could fall that far. I'm not sure. I missed the break. So the US dollar versus the Swedish krona. I was bullish on this, but we've pulled back recently. So this is going to be where it's important. We've got a call it 6-week trend line at 921.50, call it. And then we've got 920.10 as the fib support. So this has to hold. It's probably worth trying along because, as you may remember, we've broken out of this channel and really should see a strong move higher. But as soon as we got overbought, we turned lower. So is this a buying opportunity? I think it's got to be worth a small long. It's got to be worth a punt. 920.50, 920.10, give it a go. If we break below this spike low at 918, call it 918.00, then you can get out. So the risk is very, very small. Then if we continue further down, let's try along at the retest of this trend line, which is down at around 915, 913. We'll tackle that nearer the time if we actually get down there. By the time we get there, these moving averages also would be significantly higher, so we'd have a stop just below there. Dollar yen, great if you like scalping a range. That's perfect for you because we're just up one day, down the next. Barely moving last week. This week, yeah, as I say, up one day, down the next, up the next day. I have no idea which direction this goes, but if you're trading the range, you're doing really nicely on this one. Canadian dollar daily chart is just a mess. Well, we've been stuck in this sideways action for quite a long time now. We've got trend line support down at 131.00, 130.90. We've got 200 week moving average support just below at about 130.60. So if you're looking to do something in this market, this would be where you could give it a shot in that sort of 30-40 pip range, buying into a long. And as soon as we break below, let's say 130.50, you're out of that trade. That would mean we are wrong, and we could drop another 100 pips down to the 100-week moving average at around 129.50. With a bit of luck, this holds, and when we start to see a decent rally, because we are in a bull trend, as you can see, we are in a decent bull trend. We are testing the lower end of the trend, so it is worth buying into a long. That's the only thing I can suggest in this pair. I've talked about how the pound sterling looks good. We've now beaten this peak up here at 132.97. As you see, we're trading up at 133.10 as I speak to you now. Looks like we could head up to 133.62 as the next target. So all looking good for the pound. Unfortunately, I'm not long. I sold out my longs too early. So I'd have to wait for a retrace before I can get back in. But if you're long, hold longs. This looks really good. My personal favorite is a short in the gold market. So I was selling around the 1330, 1331 area. That's starting to work now. It looks good. We've got this evening star 3-candle pattern, which tells me that the market is going to sell off significantly. You will remember that we had a trend line up here at 1355, very important resistance, which we failed to reach and then reversed, leaving this negative pattern. So anyway, shorts are working. Very happy with this trade. We move below this fib area. Fib support around 1319 will be nice. We've been down to 1316, so we have actually broken it. Hopefully we'll now hold below 1319.20. Test this more minor trend line at around 1313. We get below 50% pivot at 1311, and we'll be testing more important support around 1303, 1302. Call it 1304, 1302. It's probably worth taking some profit on the trade in the short term and then seeing if we bounce back up to 1319 and then sell it again and then hope we break lower this time. But I really would expect this 1304, 1302 area to hold on the first test. It's a bit risky being long. I do think this market will collapse in the longer term. So I'm only talking in a very, very short term period when maybe we could take profit down here, buy it even, sell it up if we get into the teens, and then stay short and hope that we break lower on the second attempt. This is just a guess, of course. We may just collapse straight through 1304, 1302. So a break below 1300 would signal that the next leg down has started. So just bear that in mind. Decide how you want to trade that, up to you. Probably worth holding a core short position, if you know what I mean, and then sort of scalping it around that, if it makes sense. I'm short silver as well, for reasons that you already know. Double top at the 500-day moving average, just below the trend line, which dates back to September 2017. So there's a hell of a lot going on up there. Not surprising that we got some sell signals up there at 16. We had our sell opportunity at 1620, 1625, which we missed just by a couple of ticks, but I think I got you into shorts anyway once I'd seen all the negative patterns and sell signals and blah blah blah. Just to remind you again, on the weekly chart, the 100 week moving average was good resistance up in the high teens, and the 16 16 as you can see on the chart. Anyway, we got 1618 double top. Tweezers top with a long upper wicks. This is all looking very negative. I think this is only the start of the move down for look at the overbought situation as well on the slow stochastics on silver. I think this is only the start of the move down for gold and silver. So I'm holding shorts. I'm already up 10% on my account. and I'm expecting a lot more on this. Silver could easily get down to 15.20, which is where we've got the 200-day moving average. So there's a lot further to the downside, a lot further potential to the downside.